Hello everyone, today is January 16th, 2019, and want to show you something that I'm looking at on the SPY or the S&P 500 chart, however you want to look at it. This is an SPY chart. Don't worry about the numbers, and if you're already astute, you're already looking at the date, but I want to show you something. This is a previous setup. I believe history does tend to repeat itself, and we might very well be in the middle of a bull trap. I know we had this long downturn recently in the markets. We've had a rapid jump back. Everyone kind of seems to think maybe we're on our way to recover, and we might be. Remember, this is not financial advice. This is just what I'm seeing on the chart. This is a chart from July of 2017, and I'm going to show you some similarities here. This is a 200-day moving average. This is a daily chart of the SPY, which follows the S&P 500. And you notice, bam, we took a rapid decline here that lasted about 2 weeks. And when we came right back up, V-shaped bottom, everything looks good, right back up to the 200-day moving average. And we're going to go ahead and slide this over just a little bit so you can take a look. We're going to move this slow. We even jumped way above the 200-day. Everything was good. We're back on our way, new highs, and then came right back down below the 200 and then couldn't stay above it. And then everyone else kind of knows what happens from there, as if you weren't watching those signs, you pretty much paid the price, as we lost almost 50% of value. So let's fast forward to modern day on the chart. Modern day. Let's zoom in a little bit and take a look at what's happened here. Any similarities? Don't mind this Fibonacci retracement. I'll go ahead and show it to you. We came down, bam. This, remember, look how eerie this is compared to 2007, 2008. All-time highs, bam, down below the 200-day. Came back up, couldn't hold above the 200-day, bam, back down. Tried to get above the 200-day, bam, could not stay above the 200-day. And then we fell right out of bed, V, and now we've got this bounce back. Sound familiar? Rapid bounce back. Now let's be honest, this could be a V bottom and we could go on to new highs, or this could be a little triple top. I just wanted to show some similarities compared to 2007, 2008 of what we're looking for, as this has now come down to a complete V bottom. We'll go ahead and scroll out. This is a Fibonacci retracement from the high to the low of this move. My anticipation, look at all this overhead supply. My expectation is it will probably go sideways to trend up. Now, the real indicator of what is going to happen is going to be, let me grab a tool here. The real indicator here is going to be when we get back to 61.8 is a huge obstacle for Fibonacci retracements. And it's going to be right in this area here. And that's also going to come in with the 200-day is going to be trending down. And you've got this support, what was support, which is now going to become resistance. So my anticipation is that we might bounce around in here for the next few days. At some point, we're going to get up in this 260 to 270 range, which would be 2600, 2700, you know, on the S&P 500. And then we'll see what happens. If we can't hold above this 200-day line, if we can't reverse this trend, unfortunately, I think it would be a complete downward move from there. So use that as caution. I got some long here off this bottom right in this range. I have covered that long. If it gets up into this range, I would entertain going short and then have my stop somewhere up in here in case I'm wrong. So that's what I'm seeing. Be careful of the bull trap. History tends to repeat itself. 2007, 2008 is looking a lot like 2018, 2019. Let's hope that maybe we're wrong and we can get to this resistance, work our way through it, and then pop back out and move back into a bull trend. But that's up to you to decide. Till next time, everyone. See ya.